A very good evening to each and everyone gathered here and welcome to today's webinar. His opinion of the market going forward. After a quick recap of the market's performance in the previous month, he would be providing us a strategy we should adopt forward in this volatile market. Towards the end, we'll also be having a Q&A session where you could simply drop in any queries you have in the chat box below. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. As you know, that first of every month is to talk about equity outlook. How the month went by and how do we see the scenario going forward. So every month I'm doing on first and hence this equity outlook. If you look at the equity outlook prediction that I have been making month after month, there are more hits than misses. And the reason is, one of the reasons is that when we make and when we comment, a lot of research, a lot of data analysis goes into making the prediction. And that's one of the reasons we have a very high accuracy of our prediction. I'm going to make something very similar today also in this presentation, and hence please listen to me very, very carefully. But before I begin this webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for future performance. Now, before I start talking about this equity outlook, how the month was, what are the events that took place, let me make a very important announcement for all of you. And that announcement is that we are closing our anniversary offer. The few next hours till 12 midnight, this offer is valid. Post that, our offer price will go up substantially. It will go to 19,999 for 2 years, which does not include model portfolio or portfolio optimizer. But if you act now, the same scheme, you will get it for 14,999 for 2 years plus 3 months. In other words, you will save 5,000 rupees plus you will get additional 3 months extra. If you want model portfolio plus optimizer now, it's 19,999 for 2 years plus 3 months. From tomorrow onwards, there will not be any model portfolio, there will not be any portfolio optimizer as a part of. Even if you want, we will not be able to provide any link. So I again repeat before I go and start making my prediction for equity outlook, last few hours for you to avail our anniversary offer. 14,999 for 27 months. That does not include model portfolio and portfolio optimizer. If you want model portfolio and portfolio optimizer at 19,999. From tomorrow onwards, the price will be 19,999 for 2 years, which does not include model portfolio and portfolio optimizer. In other words, you are saving 5,000 rupees plus we are getting additional 3. Tomorrow, if you decide to go for model portfolio optimizer, even if you make a request, we will not be able to offer you. We are shutting down our model portfolio and portfolio optimizer for the new members. Is that very clear to all of you? I hope that makes it very clear. So I'll request my colleague Jason to please drop both the link 14,999 and 19,999. With this, let me go to the topic of today's webinar. How was the month June? And June was extremely volatile month with downward bias. So we thought May was bad. And if May was bad, June was worst. And I can tell you with lot of, so the data is not available in the public domain, but I can tell you with lot of confidence, most of the PMS would have seen double-digit decline in their portfolio value, double digits. Because market has been extremely choppy in the month of June. And due to that, many fund house found it extremely difficult to create an alpha on the portfolio. And the volatility you can imagine, in last 8 months, 6 months market has closed in the red. every rise in the market has been met with the decline. And that gives an idea about how sentiment in the first half of 2022 has become very, very soft. RBI, as expected, hiked the rate of interest by 50 bips. If you remember, this was predicted, and they did that. This is over and above for 40 bips rate hike they did. So in other words, total 90 bips rate hike was done by RBI in 2 months. India's CPI inflation has cooled off to some extent to 7% from April of 7.8%. When the RBI came out with the monetary policy, the MPC minute says that inflation is going to remain 6% or above 6% in the first 9 months of FY 2023. What is 6%? What is the significance of 6%? The significance of 6% is that RBI inflation target is 2 to 4%, plus or minus 2%. That's it, the tolerance level. So if it goes beyond 6%, the RBI it reaches the RBI tolerance level inflation. Till 6%, they are comfortable. And RBI believe that first 9 months, that is till December 2022, inflation will remain above 6%. My sense is that inflation would be in the region of 5.5% by November 2022. So I'm more optimistic that inflation will come under control for the very simple reason I do expect the crude oil price to go below $100, maybe $80, $90 by October 2022. And the way prices of copper, aluminum, steel, they've declined so substantially in crude oil that it will give an help to soften blow of inflation. And if the monsoon is good, even the food inflation will subside going forward. FII has been a net sellers, and this is the 9th month in a row they are the net seller. Highest record selling by FIIs. It seems there is terribly wrong with the India. And I must tell you that there is nothing wrong with the India. Very soon FII will realize that they have gone wrong somewhere in their strategy, and they will come back very strongly to the Indian equity market. But unfortunately, they sold 50,000 crore, in excess of 50,000 crore. I believe it's a record sale in 1 month. Normally, FII in a year invests about 50,000 crore on an average. In 1 month, selling 50,000 crore, it does gives a sense of feeling that there has been some kind of a panic selling. You know, there is a very famous saying that diya jab bujhne se pehle aur tej jagmagata hai. I believe is exactly opposite happening of FII selling. Just before they start becoming a net buyers, we saw this heavy selling of FIIs. And I'm going to make prediction, and you can help me accountable in next couple of months. So I'll come to that my prediction how do I see the market going on. I'll come in the later part of the presentation. In the month of June, rupee did depreciate. From 77, it went down to 79. If you remember, I predicted that rupee can touch to 80 rupees by October 2022, and that will happen. PMI for the month of June has come down little, relatively low, 53.9 versus 54.6 of May. So there has been some softness in the PMI. Now let's look at what happened to the market. So I have taken Sensex movement in the month of June 2022. What you see, the bar graph in blue color gives an indication that Sensex reported gain. And what you see, the red bar graph, suggests that the Sensex has fallen from the previous day close. And in this graph, you can see there are more reds than the blue bar graph. clearly suggesting that how bad the market sentiment was for the month of June. Sensex did touch 51,000, that's a closing level of 5360, but it did go below 51,000 on 17 June. And there was a fear that Sensex can breach the psychological level of 50,000. It did not. And market started inching up after touching 17 June and closed at 53,018. So till 17 June, market was little wobbly downward, and post 17 June, market started inching up. Thus give a comfort level that market may have formed a bottom, if not very close to the bottom. And I'll explain you why. Let's look at the Sensex monthly gain or losses. And you can see from November 2021, as high as 6 times out of 8 times, the market is closed in the red. And the worst thing is that for the month of June, this decline has been very substantial. 4.6% decline. We don't see this kind of a decline very often. But yes, it did happen in the month of June. And this is, and unfortunately for 2023, FY 2023, first 3 months, all 3 months we saw heavy selling in the market. 2.6% in April, another 2%, 2.6% fall in the month of May, and minus 4.6% in the month of June. So, if your portfolio is declining, you know why it is declining. Advanced decline ratio did improve from 0.4 to 0.91%, but it continues to remain less than 1. What does this mean? There are more declines as compared to advances, and which is not a very happy sign. And after a very long period of time, 2 months in a row, we saw less than 1 advanced decline ratio. Otherwise, whenever the market declined, advanced decline was less than 1, next month it was up. Year also up, year also up. But this is the time where 2 months in a row, more declines than the advance. That happened in the month of May, that happened in the month of June. And the drop in the market cap has been so severe that this is reflected now. India's market cap is only 243 lakh crore. India's GDP to market cap has fallen less than 1. You know, all these years, market cap to GDP was higher. Now it has fallen this one, which is really not a very happy sign, which is a very good sign, am I right? Because GDP, market cap to GDP is less than 1 is a good sign. So I think that's what has happened. And I think that makes me believe that downside is little less. I'll come to that little later part of this. And if you look at it, we were 266 lakh crore market cap when the 2021 ended. As I speak to you, not today, but yesterday's closing, 243 lakh crore. We lost 23 lakh crore market cap despite a company like LIC going public. In other words, we lost 2 TCS market cap in first 6 months of 2022. It took many years for Tata Group to create that market cap. That TCS market cap is near about 12.5 crore or so. Around 12 lakh crore or so. It took so many years, and 2x of that got lost in last 6 months. And that shows severity of the fall in the market cap of India. And that really made Indian market attractive in terms of valuation. I'll come to that. Now, what I did actually, I looked at how first half of each calendar year performed over a longer period of time, 2010 to 2012, 2022. what I've realized, see, 2020 was an exceptional year. Why? Because of COVID-19 hit us. And the first half was down by 15%. But 2022 has been very severe, 9% decline in this first half. And what I've observed, that what happens in first half does not mean it will replicate something similar in the second half. There is a high probability if the first half is down, second half would be up. And assume that if it doesn't happen, the next half is always positive. So no two times the first half, no 2 years in a row, if the first half is negative, the next first half is also negative. That has never happened. In 2011, it was negative, but in 2012, it was positive. In 2012, it was marginally negative, but 2014, it was positive. 2020, it was negative, but 2021, it was positive. In other words, first half of 2020, most probably it would be positive. Okay. How the indices perform? Nifty index was the only, auto index was the only one which was in the green. Metal saw a huge beating, so is the case with consumer durable. Nifty finance, I've been keep saying that NBFCs and bank will continue to underperform. And some of you people, some of the experts keeps coming and fooling you people, okay, they will outperform because rate of interest moving up is good for them. I have been advising you, please stay away. And 6.9% decline, Bank Nifty down by 6.7%, while Nifty 50 and Sensex is down by only 5.3 and 5.2. In other words, they continue to underperform. Even the PSU bank coming under a lot of pressure. Realty index did little outperform to the Nifty and Sensex, but it's the rate, minus 4.5%. So that's what has happened. So a lot of you people, and FMCG index, which was in green last month, was in red this time. Which company did well in Nifty 50? Of course, mainly driven by auto companies. M&M, Maruti Suzuki, that was up. Eicher Motor was up. But if you look at it, UPL was down, Hindalco was down, Tata Steel was down, Bajaj Finserv was down. They are all down in double digits. Indices Bank and Kotak Mahindra Bank. Now, you don't normally see Kotak Mahindra Bank down so much significantly, but yes, it's down by 12.7%. Titan was also down significantly. It's not part, but it was down. Titan is down, 14% is there here. And we did advise you some of these companies to exit because Market Mojo does believe in exiting from a company if it's going to underperform. We don't look at then pedigree and what kind of wealth that company created for the investors. For us, if the company is going to underperform, we will advise exit from that company come what may. FII is 9 months in a row. Significant decline. And the 50,000 crore selling by FIIs does makes me believe FII का selling जो होना था हो चुका. FIIs का selling जो होना था हो चुका. अब FII will become net positive. And if you look at my FII presentation I made, you must have seen that in presentation I did talk about that more than 2.5 lakh crore, and normally they used to command more than 19% of the total India market cap, which has gone below 18,000, below 18%, which is little unusual. And hence, we are in the very last phase of FII selling. I am not saying from tomorrow onwards they will start buying. No, I'm not saying that. But they will very soon turn positive on month-on-month basis. Southwest monsoon, I think it's very, very critical. Yesterday, I had a little harrowing time reaching home because Bombay received a lot of rain yesterday. And today also, as you can figure it out, I'm working from home today. The reason is very simple. I did not want to venture it out. Why? Because there was an orange alert. But having said that, June month, there is a 10% deficit of southwest monsoon. And if you look at it, while northeast and northeast has positive rainfall, the other three regions, that is northwest, central India and south peninsula, having a negative rainfall. This is as on 29 June. I've taken this data from IMD. What I've observed, and you know, over the last few years, the monsoon has been little delayed. You know, if you remember last year also, June was not so great, July was not there. Till August we were deficit, and then we made up whatever the lost ground in the month of September. So I'm getting a sense that monsoon will have a delay effect, and instead of getting over by September, I think it's going to get over by mid of October or so. And hence we should not too much worry about 10% deficit that has taken place till now. I'm very hopeful that monsoon will get extended, and hence by the time the southwest monsoon withdraws, India would have received a good amount of rainfall. That's what my assumption is. So what to expect going forward? Let me start with the Fed rate hike. The Fed is going to meet on 27 July. And I do believe that, so if you remember when I did the presentation on Fed policy hike, I predicted 75 basis point hike. Now I'm not sure, very sure they will do 75. I do get a sense that they will do anywhere between 50 to 75. I'm more tilted towards now 50% as compared to 75 basis rate hike. That's what my sense is. There is some concern that is emerging now, that various startups have started laying off. Am I right? And that could impact the demand for the consumer durables in the real estate. And hence we could see some amount of softness in the real estate and the consumer durable prices. That's what my sense is. So we need to be a little careful of that. We do get a sense that the commodity prices have started softening. We do expect that inflation will start going down going forward. Of course, market will look at monsoon progress very closely. Why? Because that could impact the food inflation. So I think we need to keep looking at the food inflation, the monsoon in a very close manner. I strongly believe that market has hit the bottom or very close to the bottom. Why am I saying so? Because values has become attractive. Crude oil prices have started softening, aluminum prices started softening, copper, this one, that will ease the pressure on inflation, that will not give some comfortable to RBI, and they will not go a little aggressive in terms of hiking the rate of interest. And number three, the valuations has become attractive, hence FII will come back very strongly in the market. So I do expect market to bounce back very smartly. I do expect that FIIs will become net by either in July, that is this month, or August 2022. And Jason, you can record this. If it doesn't happen, when we do presentation on 1st September 2022, you can play that and say, Sunil, you were wrong because your prediction did not come true. Am I right? So we believe that the risk-reward ratio has gone in the favor of reward. If you are planning, you are sitting on a fence to invest money, please, please, please invest now. Having said that, this prediction of risk-reward is for the Indian market. It is not for the global equity market. So while global equity market will continue to struggle, Indian equity market should do well. Indian equity market has outperformed in first half of 2022, and it will continue to outperform in the second half of 2022. Remember, my prediction is only for the Indian equity market, not for the global equity market. If you're planning to invest, do not try to cut it too fine and wait for the lowest point of the Sensex to invest. No one has been able to do that. Please invest. If you wish to increase allocation to infinity, please do that. If you wish to increase allocation to model product, please do that. And invest for 3 to 5 years. Please leave your human emotions behind and follow our advice in a very disciplined manner. But before we close this my presentation and open the floor for webinar for the question answer. Again, a gentle reminder that our anniversary offer is closing from 12 morning. Tonight, midnight, we are closing this anniversary offer. What is an anniversary offer? 14,999 for 2 years plus 3 months, which does not include model portfolio optimizer. In case if you want that, we have 19,999 that includes model portfolio plus optimizer. From tomorrow, the price of this will go to 19,999 and you will not get the 3 months extra. Why? Because it will be 19,999 for 2 years, which does not include model portfolio and portfolio optimizer. From tomorrow, even if you want model portfolio optimizer, it will not be part of Mojo Professional package. We are stopping model portfolio and portfolio optimizer is a part of Mojo Professional for the new customers. Old customer will continue to get the same benefit what they are getting as of now. So I'll request my colleague Jason to please drop both the link of 14,999 and 19,999 so that you people can avail the offer. With this, I'll open the floor for open question and answer. Over to you, Jason. Jason, I would request you to please take up question more first the market strategy kind of stuff, and then we will, if the time permits, we can look at the sector and this company.
Okay, I made a note of that. We've got a lot of question on the FPI statement you made. Mr. Raj has said that FPI has sold 2.1 lakh crores in the first half of 2022. Their equity AUM is lowest in 18 months. When and why do you believe they will return now?
So 3-4 reasons. Number one, the India's valuations become very attractive. India would be among the fastest growing economies in the world. If you look at the market cap to GDP ratio, it's less than 1. And last but not least, whatever selling that has to happen is already done by them. So there is hardly anything which they're left with to sell. And hence, they would hit the bare minimum kind of exposure. And hence, they will invest in the Indian equity market.
Okay, I'll move on to the next question. This is by Mr. Anil Ahuja. He says, Mojo stock means quality stocks. And as you rightly said, that equity investment is for the long haul, not less than 2 to 3 years. Then how do we justify the fall from high? In a volatile market, it does cause an exit from the Mojo category from buy to hold. Good to bad and ugly within a period of 8 to 12 months is not at all convincing, especially since you've chosen many filters for picking up the real gems, that's Mojo stocks. Then how do they convert into gems to dirt just within 6 to 8 months?
So thanks for your compliment, but your compliment also comes with the caveat, okay? Sir, I'm asking you a very simple question. Whom do you follow or whom do you consider as a good research firm? And look at how many times the same gem of the company, the bluest of blue chip company, they will turn from hold to buy or buy to sell. It happens with many times, whether it's a CLSA, whether it's a Morgan Stanley, whether it's a Bank of America, Merrill Lynch, or any of the leading India's brokers like Kotak Securities or MOSL or Bartley Warren Karani and so on and so forth. We believe in a philosophy. The philosophy is that if the company is going to underperform, it makes little sense to hold on to that company. HDFC Bank in last 5 years has underperformed the benchmark. Maruti Suzuki in last 5 years has underperformed the benchmark. Eicher Motors in last 5 years underperformed the benchmark. So by virtue of holding blue chip is not going to create wealth for you, because ultimately you are in this market to create wealth, isn't it? And if that objective is not getting satisfied despite investing in a blue chip, then what's the point? Now your question is that fall from high. So if a fall from high is relative to the benchmark, it's not absolute. You're right in your observation that in the falling market, many companies will fall. The fall from high trigger will get fall from high condition will get triggered only when it has fallen much higher than the benchmark. And there are certain thresholds that we have put. In that case only, that will get triggered. And if you look at those, as and when it got triggered, the company has underperformed further. It has gone down further from that level. 88% of our exit call have fallen further from the exit level. So what ultimately, if the script is going to underperform, it might as well you get out of that company and reinvest that profit in some other company. I know some of you did not exit from Tata Steel, Vedanta, Hindalco, Nalco, Dr. Lal Path Lab, Divi's Lab, Laurus Lab, Sequent Scientific, Weber Global. And you know what happened to those companies? One investor argued with me on Weber Global. He said, look at some of the bluest of the blue chip investors invested in that company. How can you exit from this company? This company will bounce back. When we advise booking losses, am I right, on the stock of the month, while on model portfolio, we advise you to book profit in stock of the month, we advise losses. You know that company is down by 60%. The market has not gone down by 60% in the last 1 year or so. The script is down by 60% despite so-called great investors continue to remain invested in that company. Laurus Lab, another classical example, and that company also recently received an award. When we realize this company is not going to create wealth, might as well get out of that company. Because you are in this equity market to create wealth. By investing in good quality company does not ensure you wealth. The same Larsen and Toubro, which is India's most efficient infrastructure company, has underperformed for a period of 10 years. The same Hero MotoCorp, which has formed a part of Ramdev Agarwal wealth creation study, has underperformed for a period of 10 years. The same ITC, for a period of 10 years, has underperformed. So what is the point if it is going to underperform? And hence, we will advise exit as and when our IP suggests so.
Okay, I'll move on to the next question. Just before that, on a lighter note, a lot of investors are actually wishing you a happy National CA Day, Mr. Sunil.
Oh, thanks a lot, sir. Thanks a lot. With folded hands, I accept your wishes. Thanks a lot. Yes, there are those who are attending this webinar and they are also CA. I heartily reciprocate to them also. And I think today is Doctor Days also, am I right? And if those who are doctors also, my wishes to them also. Thanks a lot, everyone. So nice of you.
Okay, I'll move on to this next particular question, which has come about FPIs by Mr. Amitabh. He says, Sunil ji, I'm not able to understand that if FIs are going to come back in July or August, then why did they sell so much now? Are they so foolish?
So you know, to ask that question to them. I'm not their spokesperson, but many times you would have seen that they seems to be foolish. What they do sometimes, I really not able to figure it out what they do actually, to be very frank with you. So I don't want to say whether they're foolish or not, but the best question is that you should ask them. I was doing one interview with one journalist and he was saying, does FII buying has a just one? I'll give you a classical example. The company in which they've increased the stake is Hindalco in 2022. It's the Nifty 50 company, okay? And that Hindalco has fallen the most. So now you should go and ask them, why are they investing in a company which has fallen substantially? So, and it's not that I'm saying that they invested after post-fall. They invested and the script has fallen. So you are the best person to judge. I don't want to give you anything. You please go and ask them. I'm nobody. I'm not the office spokesperson. But sometimes I really wonder what makes them go the same FII. So just look at very classical thing, na? See, normally you should be buying low and selling high. FII did exactly the opposite of that. They bought very heavily when the market was at the peak. And they're selling at every fall. They should be selling when the market was up, not the other way around.
Okay, I'll move on to this next question by Ms. Lakshmi. He says, good evening, sir. How much percentage of investable surplus should be invested in this month, July 2022?
Sir, how much is a very difficult. It varies from a person to person. I always say Do not borrow money to bring into the equity market. Do not bring any emergency fund. Despite I'm extremely bullish from now onwards, do not bring any emergency funds to the equity market, and bring only those funds which you don't need for 3 to 5 years. Now you decide if these three conditions are met, whatever amount that left, please invest.
Okay, and I'll address the one most asked question, which is coming today by a lot of investors. They want your personal opinion in the recent government implementation of the oils prices, and a lot of stocks being having a problem with that. If you could just provide some opinion.
So I think this is in continuation of what government has been doing to curb the inflation, to save the precious foreign exchange. They did with wheat export, they did with steel export, they did with sugar exports, and today that windfall gain that been applied on crude oil, and then there is a export duty on petrol and diesel. So I think it's a government is little serious about curbing the inflation, and at the same time want to ensure that there is enough petrol and diesel available within the country by discouraging the export of the same. Yes, it did impact each and every oil and gas company. You are right in your observation. It did impact each and every oil and gas company. Is the news positive? The answer is no. It is negative. To what extent it will be negative and how companies are going to navigate this, I think we need to wait and watch. Of course, today knee-jerk reaction has been negative, and rightly so. But will this be to what extent will be negative and what strategic company adopts? I think we need to wait and watch. It's too little early to assess the impact. The impact is negative, but kitna negative hoga, I think we need to wait and watch. That's what my sense is.
Okay, I'll move on to this next question. This is by Mr. Osman. He says, "Hi Sunil, recent market data suggests that FIs have increased their allocation to derivatives market. Is it one of the reasons for them being net sellers in the cash market?"
I don't know, sir. So to be very frank with you, I'm not a very big fan of FI data. I compile this data only when I'm making this presentation. Otherwise, so I don't look at on daily basis what they do and what they do. And if that is the case, then how would I know what they bought in cash market, what they did in FNO market? I have no clue. In fact, I don't follow the FNO market, to be very frank with you. So I have no clue. So hence, I will not be able to respond in a very meaningful manner.
Okay, moving on to this next particular question by Mr. Rajat. He says, "I have both Sol and Power portfolios. Please advise your recommendation whether to top up in Sol or Power."
Sir, it's all depending upon your risk appetite. Sol is more higher the risk. It's higher risk, high return. While Power is it's more of a moderate risk but high return. So you pick and choose what gives you comfort level in terms of risk taking capacity. Sol will always be a little more volatile as compared to Power. So if you can stomach more volatility, go to Sol. If you have a less capacity to stomach volatility, go for Power.
Okay, I'll move on to this next question by Mr. Ramesh Kumar. He says, "Hello Sunil ji, how can the IP not pick any stocks of Adani Group where they have multiplied wealth for investors since 2 years? Is there any human involvement on top of your IP not to select the Adani Group stocks? Please don't consider my question as a criticism, as I am going to be the Baki Spoiler family for next 4 years."
No, sir, it is not a criticism. In fact, if you ask me, we welcome constructive criticism because ultimately no one is perfect in this world. Am I right? And how do you reach towards perfection? By taking constructive feedback, constructive criticism in a right manner. So I'll welcome and I would request everyone, please give your constructive feedback to us to help us to improve. And we would love to have that. So we will not get offended. Not forget about me. Even if you have something similar to Mohit, he will also welcome. And everyone in the Markets Mojo will love constructive feedback and constructive. So we welcome that. In fact, we don't discourage, we welcome that. Now, coming back to your questions on Adani, sir, our human intervention will come only when our investment committee will only able to reject or accept the recommendation only when the score is above 70. Not a single Adani Group company, the score is above 70. It has not come for an approval. To become a mojo stock, the quality of the company has to be minimum good and excellent. Am I right? And none of this Adani Group is satisfying that condition. There is no human intervention. Our quality get defined purely based on the data. No human intervention. And hence it's not coming. Now your question is that is there a scope to not necessarily that every company that has gone up deserves to be the part of the portfolio. Am I right? We don't believe in that. In other words, we may miss out sometimes on a good quality company. But what we have observed in a hindsight, that sometimes what looks good may turn out to be a bad in the medium to long term. And we have observed in many cases. I'm not saying that will apply to Adani also, but yes, we have missed out. Maybe for right reason or wrong reason, we have missed out, but not because of any human intervention. And Jason, I would request you, please pick up all constructive feedback to us, because that's the only way we can improve our product, our services. So please do not hesitate to pick it up. Any negative question with a constructive.
Sure, sir. I'll make a note of that. Moving on to this next question by Mr. K. Bangaria. Whether we invest after quarter two results in this volatility market, strong buy stocks are become whole category in one day. In future, we can expect extreme condition in rainfall in some places, maybe more or less in some other places. And food inflation is also currently highly unpredictable.
No, sorry, it's not very clear to me. What is the question?
Yeah, his main problem is that with all this news in the market, should we invest after Q2 results?
After Q2 or Q1?
Q2.
So I hope when you say Q2 is September 2022. See, market forms bottom at the peak of the negative news. Market will never form a bottom when the things start turning around. Am I right? Because that would be too late. Market always moves in little in advance. So if you expect that market sentiments will improve by Q2, that is the post Q2 numbers which will come by, which will get over by 15 November or so, I think there's a high probability that you would have missed out on a good rally. My sense is that market has hit the bottom or very close to the bottom, and trajectory from this level seems to be upward than the downward. That's what my sense is. But you could be right, I may be wrong. But right now, I do get a sense that we should put in more money. We should allocate more to the equity market.
Okay, fair enough. This next question by Mr. Magesh Kumar. Hi, Sunil. I've been investing in mutual funds through SIP, 60,000 per month. Can I continue or shift my money to equity? Please advise.
Sir, I don't know which mutual fund you are investing, and hence which schemes you are investing. It's become a little difficult for me to give a very specific reply. But what I've observed in general with the mutual fund is that they are underperforming most of the time. And that's not my data. The SPIVA came out with the study, said that over a period of 5 years, the 82% of the large cap funds have underperformed the benchmark. So by nature, mutual fund will try to give you returns in line with the benchmark. I don't think they are in the business of generating alpha. So if you want alpha on the equity portfolio, then I think it makes a lot of sense to take a help of professional advisor like Markets Mojo and create alpha. But you are happy with below benchmark returns or in line with the benchmark returns, please continue with the mutual fund.
Okay, I'll move on to this next question. This is by Nandlal Kumar. It's taken the name of the Mojo stock, but I won't take it. Just, can we add more stock into a portfolio of Mojo stock, even if it's at 52-week high?
So we do believe in averaging upwards. We don't believe in catching falling knife. But having said that, it all depends on which company you are referring to, number one. Number two, we always suggest that you take portfolio approach rather than stock approach. Why? Because portfolio wins. Some stocks may do well, some may not do well, but portfolio normally wins. And hence my request would be take a portfolio approach. But the choice is yours, what you wish to do with her.
Okay, Mr. Sunil, we are continuing getting questions about Oil India. A lot of investors have asked that whether we should invest early since exit early since this news has come, or continue to hold the stock. What does the IP suggest, and how do we go about this now?
So, I was having, so today I have back-to-back three webinar. One event I did with some customers. Then I did one with Mojo Infinity, and I'm doing a third one right now with you. So between this Mojo Infinity webinar and this webinar, our investment committee met. We discussed about All India, and based on our IP, All India continues to remain a part of our Mojo stock list. There is nothing which our IP suggests that we need to exit in a hurry, and hence we are not exiting from Oil India as we speak. Again, Monday, Tuesday, Wednesday, as and when our IP suggests that this company can underperform, I'm not giving it will happen. As and when, whether it happens next week, after 1 month, after 3 months, after 1 year, as and when that happens, it will come to our investment committee, and that point of time, our investment committee will take a view and will advise exit. So right now, it continues to remain a hold.
Okay, I'm moving on to this next particular question. This is by Mr. Raji. He says, Sunil, by auto sector was the only sector that has done well in the month of June. Our IP has not chosen any stock from the auto sector as a Mojo stock. Any reason for this?
Two reasons could be. I'm just making a guesswork, sir. So please pardon me. Don't get me wrong. One, that our IP may continue to believe that it could be flash in the pan, in the sense the auto may not continue to do well going forward, or they may continue to do well, and then if they continue to do well in our IP, it may come with some lag. If you remember, our IP is always little late in terms of picking up. Why? Because we want to be sure, okay, this is not a flash in the pan, number one. Number two, if you remember, our Mojo Infinity portfolio, we do have some of the auto ancillary companies, and they have done reasonably well. What does this mean? That means is that sometimes our IP, instead of playing on the auto, it is playing through the auto ancillary stocks.
Okay, moving on to this next question by Mr. S.K. Gupta. He says, gems of Mojo does turn into dirt in 2-3 months of 2022 portfolios. Mojo, you directed to sell 20 to 30% lower levels, and a lot of it is wiped out from the Model Infinity portfolios created in Feb and April 2022. Could you give a correct answer for it?
So yes, you are right. You are right, absolutely right. What has happened? But sir, what you consider as a gem and it has become dirt, as I told you, and I was responding to someone previously also, we don't go by the pedigree of that company. We go by the, our IP. If our IP suggests this company is going to do well, it will remain a part of the portfolio. The moment our IP suggests it's going to underperform, see, sometimes the quality range remains good, but it's going to underperform. What's the point having remain invested in that company? Because it's not going to create wealth for you, isn't it, sir? And hence we will advise exit. So that's how the simple logic works. I hope that answers your. Are you satisfied with the answer? If you're not, please put it again. I'll request Jason to please let me make one more attempt to satisfy you with my answer.
Yeah, also the second leg of his question is that portfolios created in Feb and April have seen some of its amount get wiped out very quickly. What's your opinion on that?
Sir, it's not only Mojo Infinity, it's not only model portfolio. आप किसी भी PMS का देख लो, किसी भी AIMSIS का देख लो, they have gone down substantially. As I was explaining to you, April, May, and June has been a brutal fall in the market. And again, I'm making a prediction. I don't know whether you heard me right or not. Most of the PMS will report double-digit negative returns for the month of June, only for the month of June. And that defines how bad the market has been. If the market is extremely bad, it's become extremely difficult even for the best of the best fund manager to generate alpha. It's not practically possible. Now, the beauty with markets is that we will fall in line or much higher than the benchmark. But as and when the market stabilizes, we would be the first one to rise, which may not happen with many other fund managers. So we do underperform when the market is volatile, but we outperform significantly when the sentiment turns positive or stabilizes.
Okay, this next question by Mr. Nehal Shah, I'll just flash it on the screen for all investors and I'll just read it out in a much more simple manner. It's a bit amusing. Mr. Sunil, he said that Mojo stocks, when it's at 80 and strong, by that time we buy it. And then when it goes to hold down to 60, we sell it. Then don't you think this is against the logic of with the logic of buy high and sell low? Please guide.
No, sir, absolutely not. See, if you assume that what you are saying is right, sir, have we been able to create wealth for the investors? The answer is no. If we are doing consistently buy high and sell low, then you cannot make money only, am I right? But the fact of the life is that we did create a lot of wealth for the investors for the long term. Of course, the last 4-5 months, it's not been the case, but over a longer period of time, it has been the case. So that doesn't hold true. Now, I think you come from a theory of a buy and hold strategy. You buy one company, and if the script goes down, you continue to hold that company for a longer period of time in anticipation that one fine day, that script will go above my purchase price. If you remember, I did one webinar on HDFC Bank, and I did mention that this company is going to underperform. And some of you people did not agree with my observation at that point of time. The fact of the life, it's underperforming. Am I right? So we believe in getting out of a company at the right time. We believe if the company is going to underperform, we will exit from that company. We believe in Peter Lynch saying that do not cut flowers, do not water the weeds. If the company is going to make money, please enjoy that extended ride in that company. And if the company is going to underperform, whether it's a profit or loss, you get out of that company to create wealth for the investors.
Okay, and also the one part of the question I think Mr. Sunil you not answer is that he's saying that you buy the stock when the score is at 80 and you sell when it's at 60. So isn't that against buy high and sell low?
No, the score is a function of about 4 dots, am I right? Quality, valuation, recent quarterly financial performance, and technical. It's a function of 4 dots. Okay. If the based on the 4 dots, there is no human intervention there. Based on 4 dots, if the score is 80, it can become a buy. When any of the dots or all the dots or some of the dots deteriorates, the score automatically comes down, and that's why we advise exit. It's a purely function of dot score of the company, which happens automatically. There is no human intervention there. I hope that clarifies you, sir.
Okay, Mr. Sunil, getting a lot of requests if these offers could at least be extended for a week or more. A lot of investors have been.
It will not be extended. I'll tell you, our offer is available only till midnight today. From tomorrow, even if you want model portfolio observers, will not be available. There will not be a link also. But other features of Mojo portfolio will be available at 19,999 for 2 years only. Today you are getting 14,999 for 27 months. That is 2 years plus 3 months.
Okay, this next question by Mr. Jose. Hi Sunil ji, can you tell me what's the meaning of profit as per Markets Mojo?
So profit is very simple. Your sale price has to be higher than your purchase price. That means it's a profit.
Okay, I'll move on to this next question. This is by Mr. Menon. He said that if you quote the poor performance of PMS to compare, then what's the advantage of Markets Mojo?
Sir, I'm just giving you what is happening in the market. I'm not comparing anyone with anyone. As I told you, I'm giving you a market, what is happening in the market, where each and every fund is finding it difficult to generate alpha. Why? Because market has been extremely choppy. I'm giving you the perspective. I'm not trying to compare with any fund manager. Okay. I did not mention any name of the firm or fund also. Am I right? Okay. I don't do that. I'm giving you the perspective how bad the market scenario has been. That's it. I'm not trying to compare with us. I'm not doing that, sir.
Okay, this next question, Mr. Rajshekharan, he says, when will IT companies start their upward journey?
So right now, this is my personal opinion. I think till September, if you remember, I did one webinar somewhere in the month of November or so, and it said that from this point onwards, the IT companies may perform in line with the market or underperform. And that's exactly what has happened because of attrition rate has been high. They are not able to pass on that employee cost hike to the end customers and so forth. So I do get a sense that by September 2022, that I think the attrition rate will start pulling off, and that would really help IT companies to do well. So maybe one more quarter, I think the IT companies may continue to underperform. Post that, it can start outperforming. But you need to wait and watch. This is my personal opinion, not Marcus Mojo opinion.
Okay, I'll move on to this next particular question. Mr. Haren has said that there are many small cases currently which are giving 10% return past 1 month, 3 months, and 6 months period. What's your opinion on them?
If they're really giving that, I think doing a wonderful job. And I think you should continue investing in that. If they are doing that, if you're confident that they can continue that, I'm not very sure which are the small cases which are giving a 10% return in 1 month period. Sir, can you help me understand which are those? I would love to get educated myself, sir. Please, Jason, please jot down which are the small case which has given 10% return in last 1 month. Would love to know that, sir.
Yeah, I would request the investor to put in the chat box. We can refer the links. I'll move on this question by Jayant. Forex reserves have dropped and rupee has depreciated. Trade gap has increased. Would there be an impact of this going forward in any particular sectors which will be impacted negatively the most?
I think those who are rely too much on imports, they will definitely get an impact because of rupee. And we do believe that rupee has a fair chance of depreciating to 80 rupees by October 2022. So that can happen. But post that, we believe that rupee will stabilize at that level. We don't expect further downfall from that level. So those who are import driven, they will definitely get impacted. Those who are export driven, they will definitely get benefit of the same. And remember, due to the slowdown, due to the competitive pressure, many of these companies may not be able to pass on the higher input cost to the end customers, and hence the margin will come under pressure. Have you got that name of the small case where 10% in 1 month?
No, I've not got any particular link of.
Sir, please, जब आप statement मांगो तो please नाम भी बताइए ना सर, आपको तो पता होना चाहिए कौन सा है. Please educate not only me. Everyone else will get educated, sir, based on your statement.
This question by Mr. Sudeep, your opinion on LTTS and Indian Energy Exchange as well as on Bajaj Finance. I know you advised to exit, but I'm still holding all three in the hope of bouncing back. Please give your personal opinion, sir, on what these three stocks, as I have faith in your personal opinion.
Sir, you should not only have faith in my personal, you should also have faith in our Markets Mojo IP. And rightly so. Why? Because after we advise exit, these all three companies have substantially fallen. So we continue to believe that IX will underperform, Bajaj Finance will underperform, and LTTS will underperform. Having said that, I did recommend LTTS as a part of my Murat buys. So even though based on our IP we have exited the call, I continue to hold this company in my personal portfolio.
Okay, Mr. Sunil, with that, it's the end of the Q&A session.
So just a gentle reminder that today, last few hours for you to avail our anniversary offer, this price you will not get in future. 14,999 for 2 years plus 3 months. If you want model portfolio and portfolio optimizer, it's 19,999. From tomorrow onwards, the price will rise to 19,999 only for 2 years. 3 months extra will not be part of this package. And you will not get model portfolio and portfolio. Even if you ask for it, we will not, because we are now not adding model portfolio optimizer as a part of our Mojo Professional package. I'll request again, Jason, to drop the link so that you people can avail this offer. Otherwise, I don't want you to miss out on a very good offer. In fact, I would say it's a once in a lifetime kind of opportunity that people have to extend or become a Mojo Professional subscriber at such a low price. With this, over to you, Jason. Thanks for hosting this webinar.
Yeah, thanks a lot, Mr. Sunil. A lot of investors are asking the links in the emails. We'll also be sending an email to seeing you all come for the events next week as well. Goodbye and have a great weekend. Thank you so much.